Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's keep up with the gold analysis. So the situation on the gold market stands tricky, as we discussed yesterday, and that's the reason why we called think twice before taking any new position currently. So if you have the long position, we already talked about it, that probably you could keep it for a while, as market still shows some bullish signs that it's not hopeless, the possible upward continuation. But at the same time, the price action that we see right now here around major resistance of the 1520 area, it just tells that the sellers definitely steps in here, and you can see that this really choppy price action stands around this level. So once market reaches the 1520, sellers step in, and you can see this really significant pullback has happened. And market right now is trying to absorb the new offers that appears in this area. On the bullish side, the positive moments here is that market stands in a tight range, so it doesn't show the deep retracement returning back to the bottom. It just shows the minor pullbacks as soon as the new sell appear on the market. It pushed market lower, but not really too strong, and market trying to keep the tight consolidation that takes the shape of the flag pattern, as we have discussed yesterday. At the same time, situation here is really full of contradictions, because take a look what really we have. First of all, this bearish grabber has been formed last week, and it's still valid, because I can see market hasn't closed above this top, and this grabber has not been erased. Theoretically, this is bearish moment, and it suggests that pattern itself tells that market theoretically should drop right back down and taken out of this loss. This is the first moment. Yesterday we've got reversal session. So take a look. The market has created a new top here, but closed below the lows of the previous day, and that is potentially also bearish pattern. At the same time, currently you can see the fast rebound, which could bring us by the end of today's session the bullish grabber. If it will be formed, this pattern conversely suggests the taking out of this top, and probably we could think about taking out of this top as well in this case. As you can see, you have opposite patterns on the market, but all the stuff stand in a tight range, some kind of the flag consolidation, which is bullish by itself. So any position, if you still would like to take it, well, you should be very careful with the following the markets on some positions. So actually, the trading on the gold market never stand easy. So it's every time it's a challenge for trading the gold market. But currently, if you have a lot of contradiction patterns, it makes the trading process really very difficult. So, and if you're not ready for that, it's better to wait for some clarity or some more directional action, because despite how potentially bullish overall situation looks like, still this market stands in a very tight range, scoring, and that's really difficult to take the position. For example, yesterday we talked about the possible taking the long position if somebody wants to do this, though we warned that this could be really risky. But market has erased this grabber that we discussed. If you remember, here was the minor grabber has been formed. We said that market probably should continue move higher. So yes, some upward action, minor spike here has happened. Here was the grabber, but it was erased very soon. So what we have on intraday charts? On intraday charts we have few moments. First of all, take a look. We have the hidden bullish divergence with the May City. Don't forget that here we could get also the bullish grabber. And if this setup indeed will be correct, potentially market could form the butterfly and complete the COP target 1524, 1528. That will be the destination point. But taking in consideration that here probably a lot of stops stand, I'm not exclude the chance that market really could continue move here to the upside. So attractiveness of the bullish situation stands in a relatively small risk, because currently you can see upward action just started. The market will show a minor pullback. Taking the position with the stops below the C point, it will be not really very significant risk in the gold market, because C point currently is the vital point for the bulls. Market has to keep it to make the overall bullish scenario valid. If somehow market will stop here, drop down following the reversal session on the daily, taken out of the C point, it means that the upward continuation to flag pattern will be erased, and market will tending lower, probably back to these lows following this grabber pattern. So that's why the C point here is crucial moment. On the hourly chart you could see even better. So here, as you can see, it's definite bullish divergence with the MACD stance, and actually we have the ABCD pattern, which is the same OP as 1520. Yesterday we talked about minor ABCD, but the OP was standing at the same point. Today, as market has dropped lower and forming another C point, well, the OP stands at the same level. So that's actually what we have on the gold market. As I said, trading process here is very difficult, just because market stands in consolidation and it's a lot of volatility stands inside of it. So it's really the challenge to trade gold market here, and if it doesn't suit to you, so it's better to just ignore this market for a while and see when the market will choose the direction, trying to jump in the direction where it will be set on the market. If you still would like to do this, trying to minimize your level, your risk, so trying to take the position as close to the invalidation point as possible. Well, follow the patterns. That's the just common recommendations that we could make here on the market. But my personal opinion is that despite all the stuff that we have on the daily with this grabber and reversal session, overall market price behavior mostly reminds me the bullish price action, because market stands in a tight consolidation after upward action, forming some bullish moments on the intraday charts. And I still somehow suggest that, well, at least in my personal opinion, I'm not calling to take the position or follow my view, but I'm gravitating more to bullish continuation rather than bearish reversal here. If, of course, any external politic will intrude in the overall process or something. Well, that's what we see right now in the gold.